The ticker you're seeing on your screen, Tilray Brands, TLRY, is one of the most talked about names in the market, particularly in the cannabis sector. But the conversation isn't about its past glory. It's about its current reality and the deep, complex questions every investor is asking. Right now, as we're speaking on this Wednesday, August 20, 2025, the stock is trading at around $1.04 per share, a slight downward tick from its previous close. But what does that single number truly tell us? The answer is not nearly enough. To understand TLRY, you have to look beyond the surface. You have to understand the full picture, the risks, and the opportunities. Right now, in the middle of a very volatile market, let's start with the real-time, minute-by-minute movements. The stock opened at $1.05 and has been volatile, reaching a high of $1.09 and a low of $1.01 so far today. This is a stock known for its wild swings, and today is no different. The volume is high, with over 19 million shares traded already. This indicates a lot of action, a lot of conviction on both the buy and sell sides. The market cap sits at approximately $1.13 billion. But remember, this is a company that has seen its market cap fluctuate dramatically over the years. So, why are we seeing this movement? It's all about perception versus reality. Let's break down the latest news. Just last week, on August 14th, Tilray made a significant announcement. They are seeking an extension to regain compliance with NASDAQ listing requirements. What does that mean for you as an investor? It means that their stock price has been trading below the required minimum for a period, and they're working to address that. This isn't a news story for them, but it is a critical one. NASDAQ compliance is a big deal for institutional investors and for overall market confidence. A delisting could trigger a cascade of issues. But the story isn't all about struggle. Just a day before that, on August 13th, Tilray Medical announced a major strategic partnership in Italy with a pharmaceutical firm to expand access to medical cannabis extracts. This is a crucial piece of the puzzle. While the recreational market in the US is a headline grabber, Tilray has been quietly, and not so quietly, building its medical and international presence. This Italian partnership is a tangible step in their global strategy. And let's not forget the product diversification. On August 12th, they expanded their hemp-derived Delta-9 THC beverage lineup. Just last week, they also launched a new product, protein crackers, under their Humble Seed brand. This is their non-cannabis bet, a strategy to diversify revenue streams away from the volatility and regulatory hurdles of cannabis. But is this working? That's the billion-dollar question. Now let's talk about the numbers. The latest financial report, which came out back in April for their Q3 fiscal 2025, is a mixed bag, and it's essential you understand why. Net revenue. It was $185.8 million, a slight decrease from the prior year. However, on a constant currency basis, it was up to about $193 million. This shows that currency fluctuations are a factor, but the core business is facing challenges. Gross profit and margin. The gross profit increased by 5% to $52 million, with the gross margin improving to 28%. This is a positive sign. It suggests they're becoming more efficient in their production and operations. Net loss. This is where the red flag is. They reported a staggering net loss of nearly $794 million. A huge portion of this was a non-cash impairment charge of about $700 million, a result of macroeconomic conditions and a decline in their market capitalization. This is a punch to the gut for investors, as it represents a significant write-down of their assets. Adjusted EBITDA. This is a metric many analysts watch closely. It was $9 million, a dip from the prior year's $10.2 million. The decline was largely attributed to their strategic SKU rationalization and their focus on international markets. So, the picture we get is a company that is improving its gross profitability but is still grappling with massive losses and is facing significant headwinds in its core markets. The diversification into beverages and wellness products is a strategy to combat this, but the numbers show it's not yet a panacea. Let's zoom out and look at the landscape. Tilray doesn't operate in a vacuum. Its main competitors are names like Canopy Growth, ticker CGC, and Aurora Cannabis, ticker ACB. The entire cannabis sector is under immense pressure. The market is still heavily regulated, with federal legalization in the US remaining a distant but always present hope. Tilray versus Aurora Cannabis, ACB. While Tilray's media sentiment is more favorable, ACB has a higher percentage of institutional ownership at 47.6% compared to Tilray's 9.4%. This is a critical point. Institutional ownership often provides a degree of stability and confidence that retail investors don't. Tilray versus Canopy Growth, CGC. Both companies are pursuing diversification strategies, but CGC is also struggling with profitability and its own set of challenges. The race is on to see who can achieve sustainable profitability first. The cannabis industry is a whack-a-mole game of regulatory changes, market oversupply, and intense competition. The overall investor sentiment is cautious, to say the least. So, what do the experts think? The consensus among analysts is a hold rating. There are no sell ratings, but there are only a handful of buy ratings. The sentiment is generally neutral. The average one-year price target is around 98 cents. This is a slight downside from its current price. The price targets range from a low of 61 cents to a high of $1.76. What this tells you is that there is a wide range of opinions on the stock's future. The bulls see the potential for a rebound driven by diversification and eventual U.S. legalization. The bears see a company that is still bleeding cash, facing intense competition, and struggling with NASDAQ compliance. Let's talk about the people at the helm. CEO Irwin D. Simon recently purchased 165 shares of the company's stock at an average price of 61 cents back in July. This is a classic insider buy. Why do we care about this? It's a signal. When a CEO, who has the most intimate knowledge of the company's inner workings, buys stock, it can be a sign of confidence in its future. However, we must put this in perspective. The purchase was made at a much lower price point, and the stock is still well off its historical highs. It's a positive sign, but it doesn't erase the company's underlying challenges. So, here's everything you should know. The synthesis of all this data. Tilray is a high-risk, high-reward investment. The bull case. Diversification. The company is making tangible strides in expanding its beverage and wellness portfolios, reducing its reliance on the volatile cannabis market. Their recent partnership in Italy is a strong move into the medical segment. Future U.S. legalization. If and when federal legalization happens in the U.S., Tilray, with its established infrastructure and brands, is well positioned to capitalize on a massive new market. The prospect of cannabis being rescheduled from Schedule 1 to Schedule 3 by the DEA is a huge potential catalyst, and it's a topic of active discussion. Insider confidence. The CEO's recent stock purchase is a vote of confidence in the company's future. The bear case. Profitability issues. Despite improvements in gross margin, the company is still reporting massive net losses, primarily due to non-cash impairments. Market competition. The cannabis market is incredibly saturated and competitive, with oversupply issues driving down prices. Regulatory uncertainty. The regulatory landscape is still fragmented and unpredictable. The NASDAQ compliance issue is a lingering dark cloud over the stock. Dilution risk. To fund its operations and acquisitions, Tilray has historically relied on issuing new shares, which dilutes the value for existing shareholders. This is a constant threat. In conclusion, the story of Tilray Brands isn't simple. It's a narrative of a company trying to pivot and evolve in a complex and challenging industry. The stock price today, at $1.04, is a snapshot of this ongoing battle. It's a story of promise and peril. For the experienced, risk-tolerant investor, it may be a speculative play on future market shifts. For the average investor, it remains a cautionary tale of a volatile sector. Your decision to buy, hold, or sell should be based on a deep understanding of these factors, not just a fleeting glance at a stock price. Do your own research, understand your risk tolerance, and make an informed decision. The market waits.